We kind of reverse engineer every site we look at. We almost don't put in a purchase price at the start. We work out all the costs that we think the site's going to cost us. And then once we've factored in all costs and looked at it in detail, then we can use that as a benchmark against, okay, how much can we sell it for? How much can we build it for? What's left over after all costs? That's almost the land value. That's the value of the land. You know what I mean? Keep factoring in our profit margin that we like to achieve and factoring in the houses sold for bang on the money we want. What about 10% less? What about 10% more?
Hey UK property people, we'd love to have you join us at This Property Life Networking. It's a no-guru friendly community. Our network gets a private WhatsApp group for daily advice and deal sharing, monthly online networking with live market updates and in-person events every year. Hit the link in the description below, join today and start building real connections with active property investors. Welcome to This Property Life, the podcast where we share real stories from real people in the property world. I'm your host, Sarah Blaney, and today I'm joined by Michael Langley, a small-scale property developer, his business through smart partnerships and a clear vision. So in this episode, Michael's going to open up about the real challenges of being a smaller developer, managing risk, cash flow, navigating planning and the delivery of the actual project. We're also going to talk about how his JV partner and the steps that they took to structure their JV so it worked really well for both sides. Michael's also going to share what he looks for when he's assessing a development site in today's market, or how he's going to balance opportunity with, the challenges that we are facing at the moment. So if you're thinking about taking a leap into development or want to understand how collaboration can accelerate your journey, this one is definitely for you. So let's dive in. Welcome, Michael, to This Property Life. How are you today?
Yeah, good. Thank you. Thanks for having me on.
We've had a brief chat sort of offline. You were telling me about your story. And for me, it's like you've got the perfect mix. So tell us your background and how you've actually got to where you are with the developments that you're doing.
Background. So I originally trained architecture school, straight after A-levels, took that through, went into work with some larger architectural practices based up in Sheffield, doing kind of public sector work like schools and things. Once I left uni at a difficult time, everyone was being made, and I got made redundant as well. So decided to move away and work with a smaller scale practice where we did residential houses and things like that. And that's what drew me into the residential industry, really. At that point, after getting a few years in practice and a bit of experience, I kind of was looking for the next thing and decided to set up on my own as an architect's practice, doing small scale extensions, lofts and things to begin with, moving gradually into new build, conversions, barns, offices, and into that type of thing, really. And again, since 2017, I was doing that up until about 2021. I think I've got that entrepreneurial spirit in me where I'm always looking for kind of what's next, and began to delve into development, read a couple of books, started watching a few people on YouTube, and decided to take the plunge into development, really, and do a bit of training. And that's what led me into that space, I suppose. Kind of thought, what was the ultimate, I suppose, profession where are you top of the ladder, and that was kind of being the developer. There's no one who's your boss, I suppose, and that attracted me to it.
Every month on the second Saturday, we run an online networking session where you can meet other active investors face to face. And 3 times a year, we bring everyone together at live in-person events. Spaces are always limited, so if you want to be part of it, check out thispropertylife.co.uk/events and secure your spot today.
Yeah, so obviously with your background in architecture, you're bringing an awful lot to the party in that regard, because you're covering not just the design, but obviously you've got an appreciation of the build process and the planning process. You're bringing quite a lot to that from your skill set.
Yeah, in the architecture industry, you're just delivering almost what's in front of you. If you're working for a company, obviously you don't get to see like the developer perspective on things, if you know what I mean. Do your best, design your best work, much thinking behind the cost of what you're designing or the feasibility of actually building what you're designing. So it's all well and good, beautiful things, but quite often they get value engineered or they don't get built. So it was a bit of a bit of an eye-opener to how developers actually think about things when I began to move into the space of development, for sure.
Yeah, there's always a bit of a tricky relationship, isn't there, I suppose, between an architect and then the actual firm that's going to deliver upon those plans. You as like me as the client sitting in between, my architect and my build team, I kind of get both going, they haven't factored this into account, or, it's not going to look as good as it's supposed to. And you're kind of like in the middle going, oh my God, guys, just, like get it together. But I mean, obviously there is always going to be changes from what happens on paper to actually what happens in reality. And I guess you have a better sense of what those problems are now. And so you can bat them off at the first instance or not.
As a young architect or training architect, I think it's just handy to get out on site and see your drawings coming to life. It's really helpful to see that, okay, maybe that 2 millimeters I've been procrastinated about on the drawing doesn't actually matter in reality, because you'll see how builders build, and it's not perfect science. They get the job done. It's really helpful to see how things go together, the different stages of a build, and understand that process and then implement that into what you're drawing to make sure the buildability is worked into it so much that, can impact a builder's ability to build a scheme, so it's useful to just get out on site, have a look at what you're drawing, have a look at what's being built and go from there, I suppose. Yeah.
So you said that like sort of 2021, so sort of the middle of or just after the middle of COVID time period, you kind of got, right, I'm going to start to look into development, get a little bit of education. And I know I don't really want to talk about the pros and cons of education, because I know you've had good and bad. But even in some of the stuff that wasn't as useful to you from an education perspective, something amazing happened out of that process, didn't it?
Like you say, it's COVID, a lot of time at home, a lot of time watching YouTube and things, and decided, okay, I'm going to take the plunge into taking some education up and getting into this development space in a bit more seriousness. So a course, like a 3-day course, and then that led into like a mentorship after that. Not going to comment on the course. Got me started. It wasn't amazing. I think maybe I maybe had a bit too much knowledge, and it was maybe for fresh people fresh into the space who maybe don't understand anything at all to do with it. So it was a bit that way, but it led me to obviously meet my now business partner Christian, who runs a large construction firm, and we both were a bit disappointed with the learnings, and we kind of felt that we both had skills which each other didn't. So we thought we may as well give it a go together. The two heads is better than one. I did try it on my own for a little while, and it's really difficult to get going, get some traction. I kind of take the lead on appraising and reviewing the sites, whether they're with or that without planning, and he comes at it from a buildability perspective and can put his 2 pence in on, okay, that would be costs way too much, or that site looks really difficult to access, or things like that. So we partnered up together out of the back of that course, which was really helpful actually to get us going.
If you're loving this episode, don't just listen, subscribe. Hit that subscribe button right now so you never miss our weekly property chats, deal breakdowns and market updates. It takes a couple of seconds, it's free, and it helps us bring you even better guests and property chat. From my perspective, as I said to you before, oh my God, you're a lucky bugger. You've got all your skills, and then you've got all Christian's skills. What a great, talent pool that you've kind of starting from. But when you were first going for that business relationship, like, what were some of the things that, you felt was important to thrash out and make sure you were aligned on?
I think it's the more like personal stuff, like making sure that they've got the same work ethic, aspirations as you. People talk a good talk, but whether they work hard and are really up for the challenge is another thing. So I think we've both really driven people, and we really wanted to make it actually work. So that was a big part of it. And then just making sure everyone's got their house in order, I suppose. So he'd done really well through his construction firm already, and the development was almost a side hustle to begin with. And similarly for me, I had, an established architecture business, a couple of members of staff and things. So, we'd already been through that process of setting up businesses and understood the stresses that come with being a business owner. So yeah, we're just compatibility really, and that we'd had the same lessons already, which really helped you
had to align your values and your ethics from a personal perspective, because that is really important, and then a practical perspective. You kind of delved into each other's businesses. Did you credit score each other? Did you show each other your credit reports and go that far, or was it just like, here's my business, look at it?
We didn't actually. After we finished the training course, we didn't like partner up straight away. He actually received a package of my drawings for a client in London that I was doing some work for, to tender for the build for their project. And then he said to me, "Oh, these drawings are fantastic. Is that you, Mike?" And then I said, "Yeah, it is." And then that's what led us on to taking the business partnership more seriously. So he almost vetted my architectural skill through receiving my drawings through an unknown, in a random way. So yeah, it was I think that the universe puts these things in place for you, and funny how things come together, because if he didn't tender for that project, he wouldn't have seen my drawings, and then we wouldn't have partnered it in reality. So and obviously from my side, he was quite well established. He took me around some of his schemes that he'd built in and around London, and the finish was fantastic, just aligned with the type of stuff that I was designing in any case. So just gelled quite well, really. Yeah.
When you did your first project together, did you approach it from a let's go into business and set up a business, or did you approach it as, right, well, we'll just do a simple JV on this one where you're doing this and you're doing that, and then we'll discuss whether we want to start a business together? We
just treated it as, with any development project, you set up an SPV. We both became shareholders of that. It was just a deal specific project. We didn't really have a business at that point. It was more just, a trial run to see how we worked together. And we just made it clear from the outset who was responsible for what and who wasn't responsible for other things. So, I really headed up the early stage, getting the development going. So appraising, reviewing all the planning constraints, reviewing all the utility information, all the different bits and bobs that go into it. And then once I've collated all that information, then he brings in his in-house QS and gets everything costed and things. And so we almost treated it as if it was a client project, to be fair. So, I pull everything together to present to him to then review in a construction with his construction knowledge. So yeah,
just from being really nosy now, so obviously you've got your skill set and he's got his skill set. Together they complement really well, but you both sound like you're drivers as well. So how do you balance if there is a difference of opinion between anything around that project, whether it's the site, the build, the end use, what you're going to do with it? But how do you balance that decision making? Have you got a process that's written out for you both?
Not necessarily a process. Like you say, we're both strong-willed people, both business owners, so that there does come times where there's a difference of opinion. And I suppose we're not that proud that we both have to be right all the time, if you know what I mean. So, if I can see logic in the way he's approaching something, then, I'll step down and say, yeah, let's do it your way this time. And then vice versa, he does the same with me. So we're quite blessed in that way that we're not too headstrong. It doesn't, in the bigger picture of things, if someone's wrong, maybe everyone gets things wrong now and again. So, it just is what it is, but we just take a view on things, have a meeting and go from there. I think I speak to him more than my family or partner or anything. So, so we speak to each other like, every couple of hours of every day.
And then just for in your interest's sake, you don't have to go through specifics of your particular thing, but obviously people wonder with JVs, well, how do you work out the the profit at the end. If you're going to sell a project, for example, and you're both bringing the different skill in, how do you price up your skills worth, and how do you actually get to that, right, at the end the profit gets split in this percentage to that percentage, or how do you get to that stage?
We're just like completely equal shareholders in everything we do, because obviously he brings a skill set that and a team almost, like his in-house construction team is something that I'd have to pay a premium for if I was using another builder somewhere else, and they'd probably chuck a load of profit onto whatever building we were looking to get built with them, and that kind of thing. So he offers reduced rates of construction, I suppose, minimal profit margins on the schemes that we deliver together, in the hope that the profit margin at the end is larger for everyone to share. And what I bring to the table is just that technical knowledge and the ability to bring sites from a sketch on paper through to something ready to be built. So we tend to, in the way I work, I obviously charge our own companies for the architecture work, so I get paid throughout the developments for the architecture side of things. So I'm almost my own client, which is nice. And then whoever's the head of that development gets like a monthly fee throughout the whole duration to take the lead on that project and take it forward, basically. So one of us will be the assigned development manager of each development. So we take some money throughout, and then at the end it's just equally split, and our investors as well to get a split of that as well. So yeah,
I mean, that sounds really simple, and I think people can get really caught up in JVs in making it quite complicated, where actually when you're both bringing a skill set, you price that skill set to what it needs to be. You take it to the level of work to the project, and go for it.
I think we try and keep it not so personal. I can understand if you're partnering with someone and you're putting all your personal money into a scheme and they're not, how that you might get a bit of friction, in that scenario. We try and leverage the investors we've met over the years and use their funds to fund the deals. And we do have to put upfront capital in, but as soon as some money comes available, we then reimburse ourselves for the money we've put in, if you know what I mean. So we're always we try to always be on an even sheet. Maybe we're 10, 15 grand, like someone's paid for some legals, I've paid for something else, but then once we get some money from maybe a drawdown or our investors, then we reimburse ourselves back for that then fund. So personally, no, it's really out of pocket. It's more a business relationship, so we try and keep the stresses of putting your personal assets on the line to a minimum, really, because that's where I think the stresses and the issues come. If someone's got their house as collateral, someone hasn't, and stuff like that, so you just got to be mindful of those kind of things, as well. So yeah,
the arguments would always come down to time and money generally. So if you can identify where the money stresses will come from and work out that problem, and then if there is going to be a time imbalance with one person doing far more, then that gets recognized at the beginning and factored in, I guess, so that you're not giving lots of your time and someone else isn't, without the right remuneration structure behind it.
Yeah. I think if someone's doing a lot of work and is that person leading the developments, and there should be a line in your development appraisal that factors in paying them some money to do that. No one can work for free. So I think it's just being reasonable, really.
The first project obviously went into an SPV. So for people that don't know what that is, it's a special purchase vehicle. Is that how we're describing it?
Yeah.
It's just to do with that specific project. That company gets formed, the structure behind it, the project goes to fruition, and then that company disappears.
Every scheme we secure, we set up a new SPV, so it is becoming a bit bit crazy at the moment. I think we've got about 10 SPVs running, and that's all accountants' bills and things. So it does become quite a big undertaking. But it's the safety and security an individual SPV brings, is that entity, that deal with, its own business, would you like, and it has its own risks, and it's not attached to any other part of our structure, if you know what I mean. So yeah, we have almost like like a company diagram where we have the SPVs at the bottom. We have a trading entity above those, which owns all of those SPVs, and then we have the holding companies at the top. So I have my holding company and Christian has his. So that's the kind of structure we have, really. So yeah, we have a central company that pays for upfront costs and things, and then the SPVs pay back that central entity for the expenses it's incurred before we have money from the project, basically. Yeah, so that's how it works, really. It's quite a handy way of doing it. It does get a little bit complicated, but you just have to leverage people who know what they're doing, good accountants and real estate solicitors who are used to dealing with, developers, basically. Just go to the people that know what they're doing.
Obviously, we've got these two meetings of people to come together and they've got a development dream. So what do you actually develop? Where's your sweet spot, Michael?
I'm actually based up in Northamptonshire and Christian lives in Essex, but we both have done the majority of our work in and around London, to be honest. So his construction firm offers services to clients in and around London, and so my architecture practice was based in London before COVID. So I still have a client base down there as well. So we decided that let's stick to what we know. We know London quite well. It might be more difficult to get development, find developments and get sites secured, but we know that there's a nice buffer between build costs and sale values in and around London and the home counties. So, if you came up to Northamptonshire, the build costs are so close to the sale price that, only a big house builder can really make these schemes stack up here. Well, I think anyway. You might be a small builder who can deliver really cheaply, but for us as a slightly bigger outfit, I think that just going to the areas which have a good gap between sale and build costs is quite a useful strategy. So that's why we picked in and around London and the counties around it as well.
Yeah. So I know when I started in property, like properly, and dabbled for a couple of decades, but properly started like just over 10 years ago. Back then, not that I was ever ready for developments and didn't really have an appetite for it, but the stats that were banded around back then was a third, a third, a third. So you'd spend a third on the site, a third on the build, and a third on your profit. And obviously that might have changed over time. That's what you're sort of talking about there, isn't it? That some don't work in that regard.
We've got a site in Richmond in southwest London for a new build house. We recently secured the sale values there of £1,500 a square foot. So up in where I live, up in Northamptonshire, we're talking £300 a square foot to sell a property, and the build cost is probably 20%, 25% more in London. So like probably up at 275 a square foot, 280, maybe 300. And up in Northamptonshire, you're probably at 220s a square foot to build. So there's not much difference in the build, but the sales value is completely different, if you know what I mean. So you got much more margin and buffer to, have schemes which maybe stay on the market a little bit longer to sell, or, just gives you a little bit more breathing space, that you've got a bit of security, that, there's that buffer in there.
So lots of people talk about this cost per square foot and then the price per square foot at the end. Focusing on that cost bit, so you've said it's did you say about 275 per square foot in London?
I'd say that based on the schemes we've delivered now and the historic data we've got, I think that for new build schemes, you'll struggle to deliver for any less than that. Well, we do. Everyone's different. But we have, a few staff, a few overheads, site managers and people taking a wage. So definitely, 275 and upwards in London, I would say, a square foot to build, new build.
What do people bundle into that 275 to £300 per square foot? What's the makeup?
Yeah, so it's it's all your upfront costs, so professional fees, architects, structural engineers, warranty, building control, discharge and planning conditions, utility quotes and installation, and then moving on to the build, so the full build, everything like that. So yeah, we try and use, you know, the past projects we've delivered as benchmarks for, you know, our how our business works. Everyone's different, so this isn't like, you know, suitable for everyone, this advice, but you know, it's definitely how we work now. So yeah, I think that we try and get a good guys on an all-encompassing square foot value that we can deliver housing for, if you know what I mean. So,
and that square foot, that cost per square foot for the build and all the professional fees, upfront costs, as you've said. Obviously, in London, your land footprint isn't going to be massive because, you know, we're very restricted on sizes, you know, in the capital. But does it include the whole site? So the whole red line around in a land registry perspective?
it includes, say if you had landscaping to do to that site, you know, then yeah, it does include that. But obviously it doesn't include the purchase costs or anything like that. So the purchase is separate. So that how much you've got to pay for the land. I'm just really talking about all in costs, how much it costs you to build, you know, per square foot, roughly, in and around.
So I'm thinking, I guess, more of the outside of London places where you know, if you're doing family homes for 4 or 5 bedrooms, you're going to have a lot more outside space, but developers would include that footprint in that cost.
Everything will be factored in. So, for instance, we looked at a site up in near Cambridge, Bedfordshire border. It was for 9 dwellings, and it had a really large road leading into the site. And we went to a civil engineering firm that we know of locally, because we saw they had their signs up at a scheme down the road, and kind of asked them for a broad brush cost of how much, you know, that road would cost to build, with services, utilities, drainage, everything in it. You know, and it was quite surprising how much, you know, that road actually would have cost us to build. You know what I mean? So I think definitely it's not just about the houses per square foot. You know, it's definitely, you got to look at the site in a lot more detail. You know, if you're a long way from the main road and the services have got to be taken all the way up to your site, then that'll cost you, you know, a lot more than doing a little block paved driveway, you know, for instance. So yeah, you've really got to, if you don't know yourself, then find people who do know, you know, exactly what we do. You know, if we're concerned about groundworks, we'll go and speak to a groundworking company. If we're concerned about utilities, we'll go and speak to a utility provider to get a bit of advice. So yeah, definitely don't try and work it out yourself. ChatGPT doesn't know everything.
So we've got our build cost, which is about 275 to 300 down where you're operating, slightly less outside of the city, but obviously the sellable per square foot is a lot less. So you've got call it 300 for the sake of numbers, up to 1,500 on your sale. So there's that 1,200 in the middle there, but that's got to include the purchase and the profit. So do you have, I mean, is it that you have in your head, I'm going to pay X per square foot for a site? Is it that's like, you know, practical in your head?
We kind of reverse engineer every site we look at. So we almost don't put in a purchase price at the start. We work out all the costs that we think the site's going to cost us, and then once we've factored in all costs and looked at it in detail, then we can use that as a benchmark against, okay, how much can we sell it for? How much can we build it for? What's left over after all costs? That's almost the land value. That's the value of the land. You know what I mean? Keep factoring in our profit margin that we like to achieve, and factoring in, you know, okay, if the house is sold for, you know, bang on the money we want, what about 10% less? What about 10% more? And then we kind of are given like 3 land values that we could kind of offer on the land, really. One less appealing to us, obviously a lot higher, and then one more appealing to us, like 20% lower than what we factor in. But we find that we get sent, you know, lots of sites on a weekly basis, and 90% of the time they don't stack up at all.
That's how you'd value land, and I think that's how most people in our game would value land. But then you go out and agents have valued it. Well, how have they valued it? What is the
they've used the third rule. The problem is they give the homeowners or the landowner, they've got that figure in their head, that expectation. Then it's hard for them to get out of thinking that the site's not maybe worth that. And also, you know, you get lots of sites that are like battered around, different agents, on right move, off of right move. You know, constantly this the same sites, either because, you know, the landowner's expectations are too high, or there's something, you know, untoward with the land, really. So be careful of sites which are battered around right move and things, because they usually that's the last place they go.
There's no one snapped them up already.
If they've not been, they've obviously, most agents have got a black book of developers and a few developers who have transacted on sites and paid them their sourcing fee. So that's what we find is the main thing with agents. If you've actually paid them their fee, then they're more likely to show you something that they've got, you know, just come through the door. So yeah, I think that it's open market development deals are sometimes tricky. Not to say there isn't sites on Rightmove and things. There might be a different angle you can take on it, but we often find that it is the last place they go, to be honest.
And so let's move on to some of the developments that you've done. Like, just take us through maybe one of the deals that either you're most proud of or that you're working on at the moment, and just give us an overview of how did you assess the deal, and you know, what attracted you to it?
One of the sites we've just started, actually, it's been an awful long journey to get where we are. So we've just started digging the foundations on 2 new houses in Forest Hill, South London, sorry. So Lewisham Borough. So we originally saw some dilapidated hoarding up. We were looking around the area, and we come across this site which housed an old batch of garages which served a block of like 1960s flats, and we approached the landowner, and he'd had a go at trying to do it himself, and I think come unstuck a bit and just left it into ruin. Basically, it was just like an overgrown mess. His planning had lapsed that he had. He'd made a bit of hash of not having pre-commencement conditions discharged and getting planning enforcement involved in the site. So I think he had enough of it, to be honest. So we came in, spoke with him about it, and you know, we're willing to kind of take the risk on getting a new planning permission on the site and looking at a different angle, basically. So, you know, some of the house types that were previously approved weren't the most desirable. So that's where my expertise come in. We agreed to purchase the site on a subject to planning basis. So we agreed a figure with the landowner that we were going to pay for the site based on, you know, our initial appraisal, and then we took it back into planning, and achieved planning for two 4-bed luxury houses, and, you know, managed to maximize the footprint by an extra 25-30%. You know, managed to produce a much more desirable design, and basically, produce something that we would want to actually build. So
what had been the proposal beforehand? So you've got 2 4-bed luxury.
Yeah, it was 2 units beforehand, but just a bit odd in terms of design. I don't know, really. I don't know what what the previous architect's design aspiration was, but yeah, not very in keeping. Looked a bit like older council-y type buildings, you know, quite bland in terms of the architecture of them. So yeah, we just give them a bit of pizzazz, I suppose, and took them through planning into something that we would want to deliver. So yeah, just basically leverage the planning process to add value. So yeah, you know, we agreed the site based on the old scheme almost. So we used that as our benchmark, and then, you know, managed to maximise the margin by improving the scheme through the planning process, basically.
So when you look at a site and you're in like Lewisham, for example, are you then going back to their local plan to see what they want? Is it, you're trying to tie in with what you think is going to get approved?
I think in and around London, obviously there's few, there's less and less land available. So you've got to be quite creative with how you unlock parcels of land in and around London. Definitely looking at boroughs which have a proactive local plan in terms of development. So Lewisham have got a small sites SPD, which is a supplementary planning document that's part of their local plan, which shows you how, what they deem a good small site for development, what things you got to keep in mind, and yeah, basically a set of rules to follow for them to support a small site. So yeah, it's definitely worth looking at the local plans of certain boroughs and seeing which ones are more open to development than others, because you can get into a lot of hot water with some local authorities. I think Bromley is one which is pretty anti-development. So it just goes to show you that they're neighbouring each other, yet one's completely different to the other.
Are they different political parties in charge? Just out of interest.
Maybe, I'm not sure. Yeah, Bromley is a little bit more of a leafy suburb, larger detached houses, less massing and things. So I think they're a bit more protective of large back gardens and infill development, which go against the historic grain of an area. But in the national planning policy, the boroughs have to make a sustainable use of the land in the boroughs. So if a row of houses have 50 meter long back gardens and not manageable for the residents anymore, then a sustainable use of that site is to redevelop it. But some of the planners don't like that at all.
But this particular one, obviously you're in Lewisham, it's a kinder environment, but equally
yeah,
a load of rundown garages is an eyesore for everyone.
Definitely. So yeah, what we'd call previously developed land. So they're a lot easier to unlock. So if a site's had, something on it before, a building of some shape or form, then you'll find that a lot easier to get planning on than a patch of green grass somewhere, if you know what I mean.
So, I've seen garage sites and when we talk a garage, you're talking like little garages that belonged to a flat or a house where someone could, in the olden days, store their car, even though that doesn't happen ever.
You see them tucked around the back of blocks of historic flats, and people, maybe 15 garages or so, which, are now being let out. No one uses them. They're let out to people completely, outside of the block of flats, and become a bit of an eyesore, actually. So, yeah.
I've seen those sites come up on auction sites and whatnot before. They're, obviously, depending on location, they vary in price. But your one was obviously dilapidated and unused. If they were in use, just as a think, how easy is it to change the plan in use on that? Like, what's the council looking at to say, yeah, we'll take this storage and this garage out of that type of use and put it towards residential? Easy fix?
Maybe more difficult if it's still offering like a function to residents of a block of flats where there's mixed tenures in there. Maybe there's a few council residents, maybe there's a few private residents, and that they are using the garages, so that might be difficult to unlock than something that's vacant and maybe being rented out to private individuals on a almost like self-store basis or whatever. So yeah, I think the change of use from like garages to residential isn't too difficult. It's more, if they are still a valuable asset to some people, which might be more difficult to unlock. So we did have to. So the parties that did own the garages, there was a few owners who still had obviously lease rights in their lease over the garages. So we had to, get deed of variations for each of those residents to vary their lease, which, is a cost that, you you kind of don't know how much it'll cost really, because legal fees are hourly and stuff like that. So you get charged per email they send, and that took a long time actually to get those residents to sign into it. So yeah, that's something to be aware of, where you've got multiple owners or different ownership tenures, leasehold, freehold. That they all have rights in their existing, documentation that you've got to factor in.
So do you incentivize them to do that deed of variation for you?
So yeah, we had to pay some sums of money to a couple of them to come out of it, and but most of them were pretty amenable, because it was a complete eyesore and it was probably devaluing their properties around them. So yeah,
Right.
Yeah, there was a few that were happy enough to sign across, but there was a couple of people who were digging their heels in a little bit, but yeah, we managed to get it over the line in the end.
Okay, cool. So we've got 2 luxury 4-bed houses being developed. Foundations are going in as we're recording. How long is that process then, from spade in the floor?
What, to build them, or how long it's taken to get to this point?
Well, how long is it now going to take to build?
Yeah, so to build them, we'll probably allow a 10-month build program, 10 months to build them. So that usually is about right for us. It's funny actually, it takes you a similar amount of time to build like 4 houses as it does 2, because the trades all go on to their different plots and things. So yeah, with 10-month build, so we've had, it's usually like 18 months all in, the whole process, from acquiring the site, pre-construction, design and everything, putting the spade in the ground and then selling them. It's usually about 18 months. So 10 months within that for the build. Things always take longer. We're starting in the middle of winter, which is great.
And everyone sort of talks about the cost of building having gone up. Obviously 2019 to 2020, plasterboard prices rose, everything rose. COVID was this like just melting pot of lots of awfulness, but costs to building went really sky high. And obviously we've seen some of that come down, but it's never going to get back down to those levels. So apart from like the cost of building, what are the biggest challenges that you and Christian face in terms of, putting a small scale development together?
Managing subcontractors.
Oh, really? Okay.
Yeah. It's really difficult actually. Yeah, to find good ones and keep everyone happy and keep everyone working to the same hymn sheet. It's it can be really difficult sometimes. We had renderers. We're just finishing off 4 houses in Purley South Croydon at the moment, and the renderers just didn't turn up for 10 days. Just were non-contactable. You know what I mean? So
Yeah.
It's those kind of things. But they'd gone on to another job. Maybe they were getting more money, and the time and effort it takes to find a new company for the similar price, and sometimes you just have to wait, to be honest. So it can be frustrating, honestly. We do have subcontractor appointment terms and things they should be abiding by, but
they do what they kind of want as well. Especially, I suppose, in times when it's buoyant, they know they can. So if I think back to COVID times, builders were like, "Yeah, pay me this because I can ask that." And it was a different supply and demand, wasn't it?
I think subcontractors can be tricky, but you gradually find the people that are right for you. After a few projects, you've got your ground workers that you're going to use on every project. You've got your bricklayers you're going to use, and you gradually build that team. It's just sometimes if you've got multiple developments on the go, similar to us, then you're having to use new people in a new area, and sometimes it's hard to vet people. They may have a beautiful website, may have beautiful projects, may seem absolutely amazing, but then when it comes to delivery, they're not up to scratch. So sometimes you have to kiss a frog.
Yeah, I think it's something that is quite refreshing to actually hear. You guys as a professional developer, and especially with Christian having a construction business for so many years, to hear you say actually this is a problem, because there's lots of not on a development scale, but like buy and refurbing and refinancing just houses, buy to lets, etc., where people kind of go, oh, just, like the build process is a nightmare and I can't get the right builder, and this bloke's let me down and this has let me down, and actually it happens throughout all the stages, doesn't it?
I think after being in construction for so long and being around it, you realise that things just go wrong. You just got to roll with the punches and keep going.
Yeah, you just got to be much more solution focused.
Yeah, it's just you can't let it get you down, because things go wrong like on a weekly basis. You just need to just keep rolling with the punches. It's just part of the industry we've chosen to be in, I'm afraid. Like, yeah, people make mistakes. People don't read drawings. People don't turn up. It's just what happens, unfortunately.
Yeah, I think you're right. You just got to know that's what you're up against, and don't let it grind you down. So someone that's really detail orientated and very black and white is going to struggle, aren't they? Because it's all going to be quite fluid.
Yeah, you can't let it get to you too much. You'll kill yourself with stress and anxiety, I think, if you let that happen. I was like that before, to be honest. It was, on a few of our earlier schemes, where it was you're really personal and you're really invested in it and you got your heart and soul into everything. You're kind of staying up till the crack of dawn trying to get things done. But yeah, you come to the point when you've done a few, like there's always tomorrow, things will get worked out. We'll find a solution to that. And you just have to take a little bit of a step back so you can still have a life, I suppose.
So when I asked you about challenges, you without hesitation said it was, the supply of labour and the dynamics around that. And I honestly thought you might come back with planning constraints or the see of it all. Is that like a number 2 for you?
I think I suppose I was just more answering in relation to build what we've experienced most recently. So in terms of planning, for sure, I've got a scheme I submitted. We got an option agreement on some land, 2 homeowners who had really large back gardens. We sent them both letters, and after a few meetings and giving them some figures on what we could give them on a subject to plan basis, they agreed to sign into an option with us. And it was a relatively straightforward scheme for 4 bungalows, which was within the settlement boundary, complied with planning policy, ticked a lot of boxes, to be honest. It was for a downsizer market, and would be affordable, bungalows for more elderly or people looking to retire who maybe have a larger property who where it's unmanageable. And that one was submitted last September. Still not had, we've just about got in touch with the case officer now. So that was supposed to be
a year ago.
Yeah. Supposed to be an 8-week determination period. 8 to 12 weeks. We haven't heard from him since, I think, June. He contacted us, and then we've heard from him about a week ago, basically saying that.
In your opinion, is that happening? Because it's a story that we hear an awful lot.
With the ones that we take into option agreements, we are like funding them, with money, and it is locked into those schemes. So they're supposed to be flipped around quite quickly and maybe sold on, or we hold them to build out. But I think the main thing that's causing the planning delays is the staffing of the planning department, obviously, having budget cuts, having to get rid of planning staff. People are still submitting as many planning applications as there have ever been. I think maybe less development applications because of the complexities of it now, but householders are still submitting plenty of applications for extensions and things. And I just think it's under-resourced planning departments. They doubled the fees on us in April for planning fees, so you think they'd be able to bring in more staff. But it's really scary. So we actually look at that as a really important part of, if we're securing an option with a landowner, what local authority are they part of, and how long are they, what's their timescales to determination. So we can use like Searchland and see, okay, on average that council's taking 180 days to determine any planning application. So maybe they're under-resourced, and don't have the capacity to deal with applications. So yeah, just got to be careful where you're looking to develop, because the planning authority can be a real job stopper.
Yeah.
100%. Yeah. It's quite frustrating, actually. The landowners that we, sign the option with are getting frustrated, and it's not our fault. We'd happily pay them the money tomorrow and have it all done, but the planning authority are just behind and have probably, 400 applications to deal with before us. So you just have to wait.
It feels like a huge barrier to growth, really, for so many councils and boroughs, that frustrates everyone. And I'm sure the planners themselves are not particularly happy about it, because their job is to improve.
Like we discussed in the Lewisham site, we submitted the application. The case officer got in touch with us within 4 weeks, praised us on some of the scheme and said he wanted a few tweaks. We did that, and it was approved in the 8 weeks for 2 new builds, and he actually contacted us. So it's just you can't. There's no comparison between local authorities on what kind of planning authority you're going to get. You just have to be mindful of where you're looking to work.
And it's a bit of a slippery slope for boroughs, isn't it? I think, because you're now using technology to focus in on the councils that have got a good SLA and a good responsiveness, which means that that's where you're going to be developing, which means that the guys that are being a bit of a shit show at the moment, their housing targets met anytime soon. And you'd think, oh, well, it gives them a chance to get back on that backlog, but that's not going to happen, is it?
Yeah, it's really crazy. Keir Starmer, I think, posted on LinkedIn, get on with it to the developers. That was part of one of his posts. Just get on with it. And you kind of think, well, we are, but maybe you sort it out first and then we'll get on with it.
Yeah.
Because the planning authorities, I feel sorry for them, actually, because you've got these case officers probably not on the best wages, who have got a lot of pressure, and a lot of the good ones have gone private, and you may be left with people who are a little bit new to the planning industry, and really,
and then it takes longer,
having a stressful time in dealing with developers like me, emailing them 20 times a week.
So do you think the solution is actually resource, so it's putting more bodies in?
I think as well there has to be a bit of a commonsensical approach to, okay, this scheme ticks like 90% of the boxes. Yeah, we've got this one item, that is a bit contentious. Is that going to be a huge jobs, impact on the local community? What's the impact of that one part of the scheme that doesn't comply? And taking a commonsensical approach to it, because sometimes, a small thing like, having the drag distance for your bins too far can like, completely ruin a whole scheme to refuse, which could provide maybe 8 houses for families who are looking for housing and things and stuff like that. So we need to, I think, be a little bit more commonsensical with why schemes are refused. I think that there has to be a hierarchy of reasons for refusal. Refuse and things are important. Don't get me wrong. No one wants unsightly refuse or to drag their bins a long way, but there's plenty of historic evidence of schemes that have been approved with similar means and things. So yeah, it's I think just a bit more of a commonsensical approach. Maybe get a couple of developers in the planning department to get big kickstart.
That's what you're doing. Just get on with it.
Yeah. Approved.
Exactly. Yeah, that would be good. So let's just briefly go back then to this development you're doing in Lewisham, the 2 4-bed houses. So, what is it about that one that you're loving at the moment?
The scheme before that we're just decorating was for 4 houses in Purley, and that was on a stepped site. So that was an interesting task So we had stepped foundations, like semi-basement, waterproofing, pump drainage, all the things that maybe a developer would tell you to stay away from. We decided to do. So this site is a flat site, which is lovely, and yeah, it's we used timber frame on the scheme before, which I thought would be a huge time saver, but the complexities of getting those frames designed and built, and then the complexities of having multiple trades on site at the same time, I think we've gone back to a traditional method of construction where, the bricklayers come in after the foundations are done, and we do it in a bit more of a step-by-step process. So yeah, that's why we're looking forward to this one, just because we've kind of tried the modern method of construction. It was good, I must admit, but we're going to go back to basics, keep things a bit more simple on this one, and see the difference basically between them both. So yeah, we're just looking forward to a bit more of a simpler build on this one, less complexities, and the houses are going to be really fantastic when they're finished. We've got a master suite at the top of they're 3-story houses, and the master suite at the top has got walk-in dressing room, ensuite, a balcony overlooking like a canopy of trees, bifold doors, at the top of the houses. And then we've got really, really generous kitchens and utility rooms, just something that a normal house builder wouldn't do, I suppose. So yeah, all the spaces are really oversized and generous, nice high ceilings and things. So
a nice one having portfolio.
Yeah, we try and do things that most developers aren't doing, if you know what I mean. So, which means that hopefully that the client that we're selling to appreciates those kind of things as well.
And we've briefly touched during this podcast on the different roles that you and Christian bring, but also then there's a role of the investor. So you guys use investors to fund your developments, and obviously at the end they need to be paid back. That's their part of the process. In terms of today's market, is there people are worried? Like, I think the Right Move data that came through a couple of weeks ago, which in October, was things are less buoyant for this autumn, and there's more stock on the market than there is buyers. Is there, with your lead time of 8 months for acquisition and pre-stuff, 10 months for a build, you move the cycles quite slowly, and then when you get to the sale, you're up against what you're up against. How do you work with that, and how do you keep your investors, not panicking?
It's kind of the unknown, isn't it? We always stress test our schemes to, okay, if they sold for 10-15% less, we've allowed, what does everything look like there? Do the investors still get their money back even if we take less? If you know what I mean? Our view on investors is that, we'll give them back what they've asked for, even if we take less, if you know what I mean. Just because we want to keep them on board for a longer period of time than just one deal. And then, so we stress test the deals. Obviously, we do a lot of thorough comparable analysis at the start. We look back to, try to avoid like the comparable data from, when the COVID time, when everyone was selling at that time. I think that skews a lot of people's figures, and things come down quite a bit since then. We use comparables, a good handle on sales. We get agents review all the drawings and review all the plans and give them the CGIs and things, show them what it's going to look like at the end. And then obviously you do have a valuation done by a RIC surveyor when you buy any development site and you're using development finance. They usually downvalue you a little bit anyway and give you a bit of check-in with reality of actually what they think they're worth. So I think you have a lot of touch points on where you can gauge where your schemes, but like you say, if the market's really slow, things aren't selling, then it can quickly erode your profit margin, because by the end of the development, your max drawdown on your loan. So that's, you're being charged the maximum amount of interest per month. Or if your scheme's 4 months delayed in selling, then you're hemorrhaging money by the day, basically.
You say lots of touch points of parts of the puzzle that are going to go, yeah, actually, we're thinking this, we're thinking that price.
I think just, it's a bit common sense as well. Look at the area you're looking to build or sell in. Is there an oversupply in that area? Is there not? Other houses you're selling, like, way above the average sale price of a house in that area. Buyer's going to be in the top 1% of earners of that area. If you want to sell houses, I think you've just got to produce a good product, which is reasonable, not too expensive, and try and hit that market where the demographics are right, I suppose. Yeah.
Thank you, Michael, so much for today. It's been really interesting to hearing how you guys have structured everything. You're working at the smaller side of development, but it means that everything is within your and Christian's, remit, I suppose. And it just proves that you can make a go of it at that smaller level. It's an inspiration, I think, for other people, hopefully, that the opportunity is still there and you're still buoyant about the market for you guys.
I think you just have to keep your chin up in development. There's a lot of, I may seem chipper and happy, but there's plenty of days where I'm not. And I think construction development, you are getting into a risky game. It is stressful. Things do go wrong, but you just got to keep the end goal. And you're taking, a piece of land, you're building houses for the community. It's a sense of achievement when I go to my sites and I see, the scaffolding come down and the house is actually built, and we're kind of relieved. Okay, we've just got to do internals now. We've nearly done now.
Yeah.
And that kind of thing. So I think if you're just getting into development, go and shadow someone maybe who is doing it initially, or get yourself around some people that have actually been successful, and they'll tell you the same things to be aware of as I am. Yeah, just soundboard what you're doing off someone. Try and do it all yourself. If you're a newbie developer, definitely use the profession and the people around you to sound what you're doing.
Yeah, your job is really to be the project manager and the person that collates all the information from all the different experts that you've got around you.
You've got to know a little bit about everyone's industries. You don't need to be an expert in any of them. You just need to know enough, utilize the people around you to technical bits in the professional bits. As long as your figures stack up, that's what matters.
People that might want to get in touch with yourself and Christian and, potentially talk about projects that they could get involved with down the line. How do people get in touch with you?
Christian and I are pretty active on LinkedIn. If you search Christian Brown or Michael Langley on LinkedIn, we'll both come up on there. Instagram, it's M Langley Property for me, just Christian Brown, Christian, and with a company page called Turnkey Developments. So that's our development page, Turnkey Developments, and my architect's practice is MLA Architecture. So all of those are on Instagram and on LinkedIn, Facebook, wherever you want to look. So
Perfect. And hopefully, for people that are looking for either architecture, construction, or, looking to potentially invest in some projects, you can see the ethics and the values behind Michael and Christian's business. Yeah, it could be a win for everyone.
No problem. Thanks very much.
Perfect. Thank you so much, Michael, for joining us. Give us an insight into development in the UK at the moment. It's not without its challenges, but you're still going for it. That is great news. All right. And we'll speak soon.
Cheers. Thank you very much.